Most people think every insurance company wants you. Tell them the truth, Pete.
They absolutely do not. So every insurance company is looking for a specific client. Unless you start dealing with companies like Progressive, they do have a wide spectrum basically of people that they like to deal with, whether you have no prior insurance on the auto side or you're what they would consider a preferred type of client. They have pricing that's specific for you, and they do a great job at helping people get established with their insurance and taking care of them as they transition through different stages of their life. They're one of the few companies that really is like that, though. Most of the preferred carriers that we deal with, your companies like a Travelers or Liberty Mutual, New York Central Mutual, they want people who are established. They want people who have a good foundation in place. They meet their criteria, and they price their policies accordingly based on that.
You worked hard your whole life. The last thing you need is to get played by the system. And with us, welcome to the Insurance Wise Guys, where we bring the sharpest minds in senior living to give you real talk, real answers, and zero BS. I'm your host, Paul Barrett. Let's get into it. Welcome to the Insurance Wise Guys podcast, where we cut through the confusion and give you the straight talk about insurance decisions that matter most, especially if you're in your 60s and 70s, trying to protect everything you've worked so hard to build. I'm your host, Paul Barrett, and I've spent the last 18 exciting years doing nothing but Medicare, helping people nationwide navigate one of the most complicated government insurances. Most people I talk to every day are focused on Medicare, and rightfully so. But here's something I hear constantly. Paul, my homeowner's insurance just went up again. I just got a letter. My policy isn't being renewed. Property and casualty insurance is real stress for people in their 60s and 70s. Today, we have the luxury of having a good friend of mine, Peter Schmidt. He owns the Evergreen Insurance Company. He's the exact type of agent that I send my own family and people to. Peter, welcome to the show.
Thanks, Paul. Thanks for having me.
All right. So, Pete, I know you very well, obviously. I know you since college. We talk fairly regularly. I know you're an honest guy, a straight guy, but everybody else doesn't know anything about you or what was your path to getting to Evergreen Insurance? How long have you been in the P&C business, and what made you decide to open up your own agency?
Yeah, so it was a long road on getting here, different career for many years, and then always wanted to work for myself and always enjoyed helping people. So I figured, another friend of ours was a recruiter for farmers, and there was an opportunity to start there. So I took that. And after doing that for about 4 or 5 years, I realized that it is tough being a captive agent when you only have one option for people. And a lot of our clients are price sensitive and coverage sensitive. So I decided to go independent and switch everything over to Evergreen, where we could help a variety of customers, depending on what their situation is, with a bunch of different carriers. So we have the ability to go out and shop your insurance for you and not just get stuck with one option.
Right. I think that's important to talk about. I was going to ask another question, but you brought up some really important points. State Farm, Allstate, Progressive, Farmers, they have all these great name brand recognition. Mm-hmm. They have commercials all over the television. I think what a lot of people out there don't realize, every single one of them says they can save you hundreds on your insurance. It really depends on who you are. Most people think every insurance company wants you. Tell them the truth, Pete. Does every insurance company?
They absolutely do not.
That's right.
So every insurance company is looking for a specific client. Unless you start dealing with companies like Progressive, they do have a wide spectrum basically of people that they like to deal with, whether you have no prior insurance on the auto side or you're what they would consider a preferred type of client. They have pricing that's specific for you, and they do a great job at helping people get established with their insurance and taking care of them as they transition through different stages of their life. They're one of the few companies that really is like that, though. Most of the preferred carriers that we deal with, your companies like a Travelers or Liberty Mutual, New York Central Mutual, they want people who are established. They want people who have a good foundation in place. They meet their criteria, and they price their policies accordingly based on that.
Right. So for people listening that are wondering what we're talking about, it's just like health insurance, depending on where you live. It's basically underwriting, right? They're cherry picking who they want. They want to see a good credit score. They want your age to be between this and that. They want you to be married. All these different things. They prefer that you have an umbrella policy. They want you to make a certain income. Lots of different things are going to lead to the rate you're going to get. And it's never as simple as calling, Flo over at Progressive just to get a simple rate or talk to Jake at State Farm.
That's right.
All right. So let's start with something that generally frightens most of my clients. I've been hearing this really quite a bit. they get a non-renewal notice. Why is this happening to more people that are in their 60s and 70s?
Well, we see it on both the home and the auto side, in particular with home policies. One of the things that clients fail to recognize is that they're responsible for the maintenance of their house. So every 3 years in New York in particular, and I'll talk a lot about New York since that's where we are, companies have the ability to go back out and resurvey your house or reinspect it. And if they're seeing things that on the outside of your house aren't favorable, deterioration to your roof, moss on your roof, peeling fascia board, a handrail that came down on your steps, just a variety of factors that they would consider to be now more high risk versus when they originally wrote the policy, they will send out a non-renewal notice. Now, the good news is with home policies and home insurance, they give you the ability to fix the items and keep the policy in place. One of the challenges is though, if you look at a new roof, it can be expensive. And now as we're talking about a lot of our people in their 60s and 70s on a fixed income, coming up with the money to pay for a new roof can be, quite a burden. So our clients often end up financing it, which actually isn't a bad idea because the roof tends to be the most important part of your house, or taking out a home equity loan and being able to replace the roof. Roofs are the most sensitive portion of the home policy. Yeah, by far.
Learned something new today. I did not know that. All right.
Mhm.
So they get the notice and basically they have the opportunity to fix those things if it's not affordable. You mentioned something about financing. Do you
Mhm.
guys or any insurance companies work with finance companies that help them out or introduce them to anybody, or is that not the case?
Not for something like that. I know I can speak for my own personal situation. I had my roof replaced, and it was quite expensive. And the company that we dealt with offered financing, so we said, okay, we'll finance it and then just pay it off early. So yeah, a lot of these companies that are out there do work with roofing companies or home improvement companies do work with finance companies.
Gotcha. Okay. And now we talked about the homeowners. What about the auto insurance? I've had a few people, maybe, you know, doing health insurance or life insurance, ask people questions. Sometimes they're not always forthright and truthful 100%. And you figure that out with the underwriting. But most of them come to me and they're like, I know this probably isn't something you can help me with, but, I got a non-renewal notice for my auto insurance. I haven't been in an accident in 20 years. I don't get tickets. Do you know of anybody that can help me type of deal? Is that a particular reason, or do you think that there's some underlying thing that they're missing in the sharing of the story?
Yeah, don't auto insurance or auto insurance carriers will not renew you basically just for claims frequency. So when you're looking at your home, it's because of usually the condition of it. Could be because of claims also, an excessive amount of claims. Could potentially be where you live because companies are sensitive to coastal exposures at different times. But with auto insurance, it's the only reason why you're getting non-renew is because of claims frequency. And they don't give you the ability to fix it. It's we're done with you, move on. Thank you very much. Go find another company to deal with.
Right. Okay. So that makes sense. When we're talking about what the next steps are, so you have claims frequency. Is there anybody out there? I see the commercials with AARP. They like to talk about Hartford, but does anybody really want this age demographic, 60, 70-year-olds and older, as far as clients goes?
Yes. So with auto insurance, kind of like with the home, it depends on the carrier. So we do have certain insurance companies that will non-renew for minor things. But like as an example, if there's an accident with personal injury, they don't like that, some of the carriers, and they'll just non-renew you because of that. Or, which is becoming a hotter and hotter topic right now, if you let someone else use your car and they get in an accident and they're not on your policy, doesn't matter if it's family member, if it's someone visiting from Chicago, they're either going to look to add that person to your policy, which will drastically change your rate, or potentially put it in a situation where it doesn't meet their underwriting criteria anymore, and then they will non-renew you. Insurance companies pay a lot of money out in claims for people that aren't on policies. And, we have situations where they hide drivers. They don't want to really disclose that so-and-so is living in their household because of their driving history, because they know it's going to be a problem, and then eventually it does become a problem.
I can't believe you just brought that up. I just had somebody on Friday call me and tell me that they got dropped from the State Farm because their grandson was running errands for him in their car
Hmm.
and got a little fender bender. And I'm sure it was bigger than a fender bender, but in any event, she was dropped within a month. She had her grandson driving the car And she didn't think anything of it, right? Because he doesn't live with her, doesn't normally drive the car. She's like, I wasn't trying to be sneaky. He was just doing me a favor. And next thing you know, she's searching for insurance. So that really makes a lot of sense. I mean, I know that when we grew up, the 80s and 90s, most of us weren't even on the policy. There's a lot of sneakiness going on and you can get away with a lot more stuff. But over time, I'm sure you know way better than I do. There's been so many claims and everyone thinks every insurance company makes tons of money. And I'm not saying that they don't make money, but there's more claims than ever these days. There's more silly little accidents, especially with underage children. And then my favorite, where I live, I'm sure you see lots of it. I have neighbors that have Virginia license plates, North Carolina license plates,
Yeah.
West Virginia license plates. And until you made me actually understand, I didn't realize that how bad it was, because if you get hit by somebody that has a West Virginia insurance, that their insurance policy is not as comprehensive as the one you have to have in New York when you have issues. So it's not only insurance fraud in one way, you could really, be stuck if somebody hits you with inappropriate coverage.
Mm-hmm. Yeah,
Yeah.
and state minimums are different in every state. And even in New York, they're way too low for what they should be. But, when you start getting into even Pennsylvania and some of these other states, it's insane on the lowest level of coverage that you're legally allowed to require and what it actually won't cover, which is nothing for somebody if you get in a real accident.
So when we take a step back, we get the letter. It says, we're not renewing you. How much time do you typically have to shop and find something else? Or is it like almost instantly you get dropped?
No, so with home insurance, in a lot of cases, it could be as long as 6 months. It really depends. First, they will notify you that they're sending somebody out to do another home inspection. So it's very important that we pay attention to our mail or our email if we are on paperless with a lot of our carriers, because stuff gets missed constantly. And we hear it. We'll get a call from our clients say, oh, so-and-so showed up at my house. What are they doing? Well, they sent you a letter 2 weeks ago saying that they were going to come out and re-inspect your home. Maybe you missed it. I don't know what the case may be. But on the auto side, it's usually within 45 days and it's usually close to your renewal. The only time it'll be quicker than that is if they think you misrepresented yourself on your application on a new policy. They dig into something and they find out that it's really not business that they would have written. So you do have time. It's not instant. Again, coming back to the power of having an independent agent, in our agency, when we get a notification like that from one of our clients, we know right away we need to get on it. So we can start looking for other options for you so there's no lapse in coverage and you have nothing to worry about.
Right. I mean, I think that's huge when it comes down to it. Most of the clients that are calling me, they don't have a broker. They have State Farm, they have Allstate, they have whoever. And the bottom line is, once you get dropped, whether it's your cable company, your phone company, anybody that's a captive company has no other options for you. They're telling you goodbye, and it's up to you to figure it out.
Mm-hmm. Exactly.
And
that can be stressful in itself.
Exactly. That's the main thing. Like, I know most people with Medicare, they don't want to do their own research. They don't want to figure out the policies. They want to talk to somebody that knows, that they can trust and say, all right, I trust Peter. I'm going to go with them. I trust Paul. I'm going to go with them. So I just think it's really important to hit home on, once again, being an independent. A lot of people, love State Farm and all these other companies, but the bottom line is State Farm only loves you until you start putting claims in. And once you need them, they don't love you anymore. Nothing against Jake, but it's a fact, right? Everybody's in business to make money. And once you start costing them money, that's when they're going to say, so long, good luck, and then you're stuck. And then what happens? We talked about this morning. You go online and you see that wonderful ad that you see. Oh, look, auto $39. Let me click on this. What happens, Pete, when you click on those?
All right. So you definitely want to avoid that. So when you start looking at those options that you see online, maybe you see it on Facebook, you see it on Yahoo, rates just came down in New York, all this stuff. Well, what you're doing is you're giving that company permission to give your information out to basically everybody and anybody who wants it. So you will start to get bombarded with phone calls, emails, text messages, and you're not going to get $39 insurance. It really doesn't exist in New York, first of all, but everybody would want $39 insurance. It's just a way to get your information and then put you through the misery of having to hit, block caller, it's a spam, all that stuff, and the calls won't stop. They'll just keep on going. So when you're looking at how your rates are developed, it's a variety of factors. So insurance companies look at what your insurance score is, which in part is built on your credit score, your driving history, where you live, how long you've had your license, and a variety of other factors. So if you're someone who, even if you're 60 years old and you just got your license, they're going to look at you as an inexperienced operator. So your rates are going to be higher. If you have no prior insurance, meaning you haven't had insurance for at least 6 consecutive months without a lapse, your rates are going to be higher. If your credit tends not to be so hot, your rate's going to be higher. The reason behind that one is insurance companies like to know if you have the ability to pay for some damage yourself in case of a claim situation. So what I'm talking about is if you hit the curb and caused $800 worth of damage to your car and you have a $500 deductible, are you going to file that claim to basically get $300 back? Or are you going to go ahead and say, you know what, it's $800, I made a mistake, I'm just going to pay for this one myself? And if people have credit available to them and the ability to take that situation and pay for that repair themselves, insurance companies like that. If you're going to file small claims usually end up leading up to big claims because they develop a pattern. And that's when insurance companies say, hey, you know what, hold up. You know, this guy just filed 3 claims for, $1,000, $1,200, and $1,500. When's the big one coming? And that comes back to our previous conversation on the non-renewal claims frequency. So not to jump around too much, but those are some of the factors that end up going into your rates. And inflation is one of those other topics that tends to be hot with people these days. The cost of rebuilding your home, the cost of repairing your car has long gone up significantly from where we were prior to COVID, and those expenses continue to go up. So these are some of the things that factor into what your rate is and why your insurance score, your credit score does make a difference.
Yeah, you just brought something up, and I had to question out of order, but something that concerns me, most of the people that are going to be listening in their 60s and 70s have had a home for 20 to 30 years.
Mm-hmm.
The home is obviously should be worth a lot more than it was 20 or 30 years ago, right? So now most of these people, I find when I talk to them, they've had their policy forever, right? Decades. They're underinsured, right? Because the cost to fix everything. I mean, I heard something about this the other day. Maybe you could fill it in. Like, you definitely should have a policy review with your agent, how often, to make sure that when you do have damage 20 years after owning your home, you're not completely overwhelmed by, oh my God, my insurance isn't going to cover all.
Yeah. I think that's where a lot of people over the years, especially if they're with a captive agency, have just become complacent. The renewals come in, the price looks good, off we go. It's paid for another year. But the replacement cost of that house is probably a lot different today. Actually, it would definitely be a lot different today than it would be 20 years ago. So home insurance policies have inflation guard built into them of 3%. But as you know, the cost of labor and cost of materials is going up a lot more than what 3% a year ends up being. So you can potentially find yourself in a situation where you are underinsured. And most likely you are if you haven't shopped your insurance or asked your agent to rerun a replacement cost estimator, which most people wouldn't do because they wouldn't even know about that. So
I think
it
that
can
happens.
be.
I don't mean to cut you off, but
Yeah.
somebody was trying to talk to me about a policy review, and I of course, being the nerd that I am, I go on Claude and ChatGPT, and what questions should I ask my agent? And my agent, by the way, the one that actually owns the agency, I know him since kindergarten, so that's why I haven't left him. But every year there's a new agent that speaks to me, because it's like you have an agent for a year, then they quit and do something else. You have an agent. I noticed that with the captive agencies a lot.
Yeah.
I guess maybe you can't make a good living there. I have no idea. But it seems like I'm always starting out with somebody that almost knows less than I do. When they call me for a review, they have nothing really to ask or say. No one's ever asked me about, my roof, or how's this or how's that. And did you know after COVID, the cost of all these supplies has gone way up, and just like everything else, it hasn't come down, just like our grocery, right? So
Yep.
everything, the sheetrock, the lumber, everything is costing more. And I know this because my clients and friends I hear about, when they get stuff repairs, like, oh my God, I thought I was going to be covered. And they're short $25,000-$30,000 to have things fixed, and they just had no idea what it was going to cost them. So is that something that you guys do? You send out letters, you call them. How do you follow up with people to make sure that they don't end up saying, damn, I wish if someone would have called me, I would have I would have paid an extra $100 to make sure I had, more coverage.
Yeah. So when we're looking at writing new policies or even in our renewals, there's certain coverage that we always want to make sure is in place. Now, one of the good things today is just about every company out there is only writing replacement cost policies, not actual cash value policies. So they're making sure that your property is insured 100% to what the replacement cost is. And there is a difference between the market value and the replacement cost. Because depending on where you live, the market value could be significantly higher or lower than what it would cost to actually rebuild your house. So if you go on Zillow and Zillow tells you your house is worth $500,000, but your house is in an area that may not be favorable. So the market may be telling you your house is worth $500,000, but your house is actually 3,500 square feet and would cost $700,000 to rebuild. Or we run into it the opposite way. I live now in northern New Jersey. Everyone has to have their shore houses. You have a 1,200 square foot ranch that's in a great town, and that house could be $1.5, $2 million, but to actually rebuild that house would cost significantly less than what the market value is. So the insurance company is only concerned with what the replacement cost of your home is, what it would cost them to rebuild it in the same style that it is today. So they're making sure that you're insured to 100% of that. If you go below that, you end up with an ACV policy. It's called actual cash value. Basically, that's only going to pay out on what the policy is written at. So, if the actual replacement cost of your house is $500,000, you have an ACV policy for $300,000 and your house burns down, you're only going to pay up to $300,000, which is going to leave you with a gap in coverage. Like I said, thankfully, most carriers won't write any of those types of policies anymore. They've actually gone the other way for a very low price increase in your policy of including extra replacement cost value, an additional 25% or 50% on top of what you have for very minimal cost. The benefit of that is, and going back to COVID, we saw that quite a bit. When the price of lumber skyrocketed and plywood basically tripled and quadrupled in price, and lumber went up a lot, people were home a lot more. And we saw that fires were happening at a higher frequency and houses were burning down. So now to rebuild your house the same way that it was, prior to COVID, and now seeing what the expense was for that cost, the increased cost in lumber, some people didn't have enough coverage. So if you have that additional replacement cost coverage, they were fine. Yep.
Yeah, I mean, obviously, I'm an insurance geek. You are too. I always get the extra. I'd rather be happy than sad when I need a claim. And
Yeah.
let's face it, you don't want to get value out of your insurance. If you do, there's something wrong with you, right? I don't want my house burning down and be like, yay, I just made $20,000. They're going to rebuild my house and I have a little money left over. Or, I went to the hospital. I have an Aflac policy and I get $50,000 from Aflac because I have cancer, right? These aren't things that you get excited
Right.
about, but they do provide relief. They do provide, some kind of peace of mind. And, listen, if you have the extra money to do stuff and you don't have to worry about it, there's a lot to be said. That's what insurance is for, is to give you peace of mind in case something happens, not know something's going to happen and take advantage of the system, right? All right. So jumping around a little bit, we didn't talk about umbrella policies. I spoke to a few people recently, clients, and they got boats, they got second homes, and they're telling me how they have one insurance company for this, another insurance company for that, because they got a good boat rate, a good motorcycle rate, a better renter's policy or something, a combination of silliness. So a lot of people have accumulated assets by the time they're in their 60s and 70s. Do you discuss umbrella policies with people, or do they have to bring it up? I mean, because I know my State Farm guy never asked me about it, and I had to ask him.
Yeah, we like to dig in on some of that stuff, especially if you have the toys, right? So when we're quoting somebody who's new to our agency and they bring up that they have a boat or a motorcycle, they like to ride, because one of our jobs is to make sure that we actually know our clients and build a relationship with them. It's not just a transaction. So as we're having a conversation, we're finding out these things. That's when the conversation comes up around umbrellas. And we just start talking about work in general. And, they say they're retired. And we talk about how they worked at the hospital for the last 20 years. And as the conversation goes on, the umbrella does come up because we want to make sure that their assets are protected, plain and simple. So basically what the purpose of the umbrella is to give you extra liability coverage over everything that you have. So your auto limits on your policy have to be the highest at 250, 500,000 in New York. Your home policy has to have at least 300,000 in liability, but you can go up to $1 million on that. So the umbrella would give you an extra $1 million, $2 million, $3 million, up to $5 million you can purchase of coverage over those items. The same with your boat, the same with your jet skis, the same with your RV, your travel trailer, your snowmobiles. It gives you that extra liability coverage over all of it. It will not give you any sort of property coverage. So it would not kick in if your house burned down and you didn't have enough coverage, or if you've totaled your car, you didn't have gap insurance, and now you were responsible for $20,000 to the finance company. It wouldn't cover you for anything like that. But somebody sues you, which does happen quite a bit, especially if you're in an auto accident in New York, it would help pay for those additional expenses above what your policy would pay. So your policy pays first, and then the umbrella would kick in after that.
Right. So if you happen to be driving, you get in an accident and somebody has personal injuries and
Mm-hmm.
they come after you for, $1 million, and your auto policy obviously isn't built to cover that. The umbrella policy comes in and saves the day, so to speak.
Correct. Yep.
Gotcha. All right, cool. Now, I don't want to keep you on forever. A couple more questions. I
Mm-hmm.
was just curious. I know there's a lot of things in the insurance world that I feel people should have, but they don't. Is there any policies that are in the P&C world that you feel are underappreciated or under-offered or used by consumers, particularly consumers that are older, 60s, 70s, whatever?
There's an endorsement on your home policy that you can get. Depending on where you live, it could be extremely important to you. And that would be service line coverage. So you're responsible for any utility lines or municipal lines that run from the street to your house. So as an example, if you have municipal water, if you have sewer, gas, even in some cases power lines that are buried, and something goes wrong on your property with that. I had, as an example, one of my clients, he got some crazy water bills last summer. It's like, why is my water bill like $300 a month? Well, what they found was that the line from the street to his house was leaking, and he ended up with a swampy front yard, a high water bill, but had service line coverage. So that coverage covers the cost of having somebody to come in and dig up that line and repair it for you. It can become very expensive depending on what the situation is. If it's an issue with a sewer, you have to have that line repaired or replaced. It could be expensive just for the excavation alone. You have to, get the company to come out, pay for it, to dig it up and repair the line. You have to deal with the town. It's an inconvenience and can be costly. So that's one of those endorsements that's very cheap that you should absolutely look to have on your home policy.
Makes sense. I did see a couple weeks ago when I was driving to a customer's house, it appeared that they had a sewer pipe bust, and it just flooded the whole front yard. And next thing you know, obviously they're having the whole front yard redone and all that stuff. Is that something that would be covered under that, or?
The landscaping wouldn't be, but the actual digging up of the line and replacement or repair of the line would be.
Yeah, because the town was the one replacing it. I know that. So that's interesting. Okay.
Yeah. And if you don't have the money to do it, the town will just increase your taxes. So they're not going to pay for your problem, basically.
Gotcha. All right. So let's wrap it up. What's something in the P&C insurance industry that consumers would be surprised to learn if they knew it?
Well, we touched a little bit on it before, and even conversations with our clients, there's a whole portion of maintenance that is just the responsibility of the client and not the insurance company. So keep up with your house, keep up with your roof, look around once in a while. If something doesn't look right, it needs to be fixed. Odds are it does need to be fixed, and you should be proactive with it before it turns into a bigger issue. Insurance really is about managing risk. So both on the auto and the home side. So if you feel like something's not right, it's probably not. Call your agent, have a conversation with them, see what they think. If they're really looking out for your best interest, they'll give you good advice and have a meaningful conversation with you on what you need to do. Stay away from small claims too. That's a huge one. Claims frequency is the number one reason why your rates are going up and why people are being non-renewed. Again, talk to your agent, have a conversation with them on what happened, if it's going to be covered, if it's not going to be covered, and make a decision based off of that.
Awesome. It's been exactly what I hoped it would be. Straight talk, no BS or jargon. I hope people got some useful information, had some questions answered. If they want to reach you directly, first off, I know you obviously are in New York. Are you licensed in any other states?
New York, New Jersey, Pennsylvania, and Connecticut.
Awesome. So for people that want to reach you in those states, New York, New Jersey, Pennsylvania, and Connecticut, what's the best way for them to contact you?
We have a couple. Email is fine. Peter at evergreeninsurance.us. Our website, evergreeninsurance.us. Call, text anytime, 845-673-6127.
Awesome. And one thing I want to add to that, guys, wealth of information, nice guy, someone I send people to, almost anybody that I send people to, it's because I know they're not going to sell them. They're going to answer their questions. And if they can help them, they will. And if they can't, they're going to give you advice and tell you to go someplace else. Never, ever going to put you into something that's not right for you. And the other thing is, Pete's been doing this for years. One of the few independent agents I know that also has an agent that's been there for years. You still have Vlad working there, right?
Yeah, 8 years now.
Insurance guy that I know that has a captive agency, whether it's Farmers, State Farm, Allstate. You have basically a carousel of agents that are there for a year or two, then they're gone, and you're constantly getting used to them. So that's it for this episode of the Insurance Wise Guys. If you got some good information out of this, you know somebody that could use this type of information, share it with somebody you know. All right, that's exactly what we made this for. We're going to keep bringing on experts. Pete will be back to answer more specific questions down the road. And that's it. I'm Paul Barrett. This is the Insurance Wise Guys, and we'll see you next time. And that's a wrap. Another episode of the Insurance Wise Guys. If today's conversation made you think, good, that's exactly the point. Share this with somebody who needs to hear it, because the best thing you can do for people you care about is make sure they have the right information before they need it. I'm Paul Barrett. Stay wise, stay protected, and we'll see you next time.